What if $1.9 billion simply didn't exist? Not hidden, not stolen in the shadows, just never there. Wirecard was once one of Europe's most celebrated fintech companies, a symbol of innovation, ambition, and Germany's answer to Silicon Valley. Its stock soared, investors believed, and regulators trusted. On the surface, everything seemed perfect. But behind the glossy annual reports and bold expansion plans lay a deception so massive that it would become one of the biggest financial scandals in modern European history. In this video, we'll break down how Wirecard rose to prominence, how it fooled regulators and investors alike, and how $1.9 billion vanished without a trace, triggering a collapse that stunned the world. If you want to uncover more shocking financial scandals, make sure to like this video, subscribe to our channel, and comment your thoughts below. The rise of Wirecard. Wirecard was founded in 1999 in Germany as a small digital payments company, but it had ambitious global dreams. The company rapidly expanded across Europe and Asia, promising to revolutionize financial transactions and reshape how businesses and consumers handled money. Its IPO and partnerships with major banks and retailers gave it credibility, while soaring stock prices captivated investors and drew worldwide media attention. Wirecard was celebrated as a fintech pioneer, hailed as a model of innovation and rapid growth. Early success, however, masked underlying vulnerabilities, as the company's impressive reports often relied on inflated numbers and unverifiable claims. The rise of Wirecard seemed unstoppable, demonstrating the power of ambition, marketing, and technology. Yet beneath the surface, the foundation was far less solid than it appeared, quietly sowing seeds of deception that would eventually lead to a shocking and catastrophic collapse. Signs of trouble. Even as Wirecard soared, red flags began to appear. Auditors questioned financial statements, and journalists, especially from the Financial Times, uncovered suspicious transactions and offshore accounts that didn't add up. Regulators were slow to react, allowing the company to maintain its carefully crafted illusion of success. Unusual accounting methods, opaque bookkeeping practices, and unverifiable revenue streams hinted at serious underlying problems. Analysts and investors were dazzled by growth, often overlooking these warnings in their excitement. Media scrutiny highlighted discrepancies between the company's claims and reality, yet Wirecard skillfully deflected criticism with press releases and public appearances. These warning signs, if investigated thoroughly, could have prevented the eventual collapse. Instead, the company's charm, flashy image, and growing influence kept skepticism at bay, letting a complex web of deception flourish undetected for years. The deception behind the empire. Wirecard's empire was built on an elaborate system of lies. Executives, including CEO Markus Braun and COO Jan Marsalek, manipulated financial statements, reporting billions in revenue that never existed. Fake clients and phantom accounts created the illusion of success, while auditors repeatedly failed to spot the fraud. Even banks and investors trusted Wirecard's reports, further reinforcing the deception. $1.9 billion supposedly held in trustee accounts was missing, a revelation that would eventually trigger global scrutiny. Offshore subsidiaries and complex accounting helped hide these discrepancies. The company's ability to maintain investor trust despite widespread fraud highlights the vulnerabilities of global finance, showing how ambition, technology, and greed can disguise even massive corporate deception for years. The dramatic fall. Wirecard's house of cards collapsed in 2020 when auditors could not verify $1.9 billion in supposed trustee accounts. The company filed for insolvency, shocking the financial world and sending tremors through global markets. Investors panicked, stock prices plummeted, and lawsuits were filed on multiple fronts. Executives, including Braun, were arrested, while regulators faced intense criticism for failing to act on repeated warnings despite mounting evidence. News outlets across the globe covered the scandal, exposing the staggering magnitude of investor losses, corporate deception, and fraudulent practices. Wirecard's sudden collapse highlighted the risks of unchecked growth, weak oversight, and corporate greed. What once appeared to be a fintech marvel had become a cautionary tale, revealing that even highly celebrated empires can hide catastrophic secrets, leaving the financial world reeling in disbelief and prompting urgent calls for reform. Global repercussions. Wirecard's scandal sent shockwaves across international finance. Investors worldwide faced significant losses, with many seeing their life savings or major portfolios wiped out almost overnight. Banks and financial institutions were forced to reevaluate their partnerships with emerging fintech companies, implementing stricter due diligence processes. Regulators came under intense scrutiny for negligence, prompting debates on how oversight could have been more effective. Auditing standards were questioned globally, with calls for reforms to prevent similar fraud. The collapse raised urgent questions about corporate governance, transparency, and accountability in financial markets. Other fintech firms faced heightened scrutiny as trust in innovative payment systems was shaken. Wirecard's failure illustrated how the consequences of corporate fraud extend far beyond one company, affecting investor confidence, market stability, and regulatory policy worldwide. Governments and institutions began reviewing compliance frameworks, risk management procedures, and investor protection laws. The scandal remains a pivotal case study for financial institutions, regulators, and investors, serving as a sobering reminder of the dangers of blind trust, unchecked ambition, and the human cost of corporate deception in modern finance. Lessons from Wirecard. Wirecard's story offers critical lessons. Investors are reminded to question hype and demand transparency, as even celebrated companies can conceal massive fraud. Regulators learn that delayed or weak oversight can enable deception at a global scale. Auditors must maintain integrity regardless of corporate pressure, and fintech innovators are warned that ambition without ethics can lead to disaster. For example, many investors ignored early warnings and relied solely on impressive stock growth and media praise, only to face devastating losses when the truth came out. The scandal also shows the importance of verifying financial claims and understanding the human cost of corporate greed. By studying Wirecard, financial professionals and enthusiasts can better grasp vulnerabilities in modern finance, the mechanics of large-scale deception, and the consequences of ignoring warning signs in pursuit of rapid growth. And that's the story of Wirecard, a company that rose to dazzling heights only to collapse under the weight of its own deception. From ambition and innovation to secrecy and scandal, this tale reminds us how easily even the most celebrated empires can hide shocking truths. The lessons are clear: vigilance, transparency, and critical thinking are crucial in finance and in life. If this story fascinated or surprised you, don't stop here. Hit subscribe to join our community, like if you found the video insightful, and comment your thoughts. Could this scandal have been prevented? We're just getting started uncovering the world's most incredible financial stories, and the next one might be even more shocking. Stay curious, stay informed, and we'll see you in the next video.